our trusted space for honest and easy to understand crypto and finance talk. If you are here, you already know how important it is to stay informed in this ever-changing world of blockchain. Today, we're diving into a topic that's been buzzing across the entire XRP community. People are asking if Ripple is actually going to donate or transfer some of its escrow XRP to the United States government, or maybe even the International Monetary Fund. It's a huge question with even bigger consequences. And the reason behind all this talk comes down to something called the Clarity Act. This new piece of legislation could completely reshape how Ripple operates and how XRP is classified going forward. Now, the Clarity Act currently proposes that any issuer of a digital commodity like Ripple with XRP cannot own more than 20% of the total supply if they want that asset to be recognized as a mature blockchain network. Ripple, as we know, currently holds around 35 billion XRP, locked in escrow, which is much higher than the 20% cap being discussed. That's where things get complicated. If this act becomes law, Ripple will need to make a big decision. They would have two main options. The first option is to transfer about 15 to 20% of the escrowed XRP to the United States or another government entity to bring their holdings below the legal limit. The second option is to publicly reveal the details of the 1,700 contracts tied to the escrow, including the names of those who have rights to the tokens. Some of these contracts are protected by non-disclosure agreements, which makes it tricky, but eventually Ripple might not have a choice if they want to comply with the act. If Ripple chooses to transfer some of its XRP, this could give the International Monetary Fund a path to set a price for XRP and potentially adopt it as a digital version of the special drawing right, often referred to as an ESDR. That would be a groundbreaking development, something that could make XRP one of the first truly global bridge assets used by multiple governments and central banks. But if Ripple decides instead to disclose all ownership information, we might finally find out if major institutions like BlackRock, JP Morgan, or other big financial players already hold pre-allocated portions of Ripple's escrow. This would confirm many of the rumors circulating in the crypto space and could change how investors perceive XRP's value overnight. Adding to all this speculation, Ripple's chief technology officer, David Schwartz, recently confirmed something that caught the community off guard. He said that some of the escrowed XRP might already be pre-allocated or even pre-purchased. This means that even though those tokens are locked, they already have future owners waiting for them. However, those tokens can't be circulated until their official release dates. Each month, Ripple unlocks about 1 billion XRP from escrow, and on average, around 70 to 80% of that gets locked back in. Only a small amount enters the market, keeping supply limited. This structured release system creates a level of predictability that most other cryptocurrencies don't have. And now that we know some of those tokens are already spoken for, it adds an entirely new layer to Ripple's long-term strategy. The Clarity Act itself passed in the House back in 2025, but it's not officially law yet. Even so, it's already changing conversations in the crypto world. The main goal of the act is to define what qualifies as a mature blockchain system. If XRP meets that requirement, it would be regulated by the Commodity Futures Trading Commission instead of the Securities and Exchange Commission. That's a big deal because Ripple has already spent years fighting with the SEC over XRP's classification as a security. If the Clarity Act moves forward, this new framework could finally give Ripple the stability it's been waiting for. Now that we understand the foundation of Ripple's situation with the Clarity Act, let's dig deeper into what this could mean from a real-world perspective. The escrow system that Ripple uses has always been one of the most fascinating parts of its ecosystem. Each month, 1 billion XRP tokens are unlocked from escrow. However, Ripple doesn't just dump these tokens into the market. Historically, around 70 to 80% of the released tokens are relocked back into escrow. This keeps supply consistent and prevents wild price swings. It also shows that Ripple is being cautious about flooding the market. But now, with this new development, it looks like Ripple may have already allocated or even pre-sold some of these tokens through private agreements or contracts. When David Schwartz confirmed that escrow could be pre-bought, it gave the crypto community a glimpse into how Ripple has been planning for the long term. Even if an entity buys XRP that's still locked, they can't use it until it's released, but they already have ownership rights. This mechanism ensures that Ripple has predictable liquidity partners and long-term investors who are aligned with their global payment goals. If you think about it, it's similar to how large institutions pre-buy treasury bonds or government securities that mature later. Ripple seems to have taken that same concept and applied it to digital assets. One of the biggest updates this month is the rollout of ISO 2022 scheduled for November 22nd. For many people, this might just sound like a technical standard, but in reality, it's a massive shift in how financial institutions communicate. ISO 2022 is a universal messaging system that allows banks and other payment networks to speak the same language. It enables instant settlement of payments using APIs connected to distributed ledger technology, which is exactly where XRP comes into play. Ripple has been preparing for this moment for over a decade. Their XRP ledger is fully capable of supporting this new standard, meaning that banks and central institutions can implement faster, cheaper, and more efficient cross-border payments. Ripple's positioning here is very strategic. Unlike Bitcoin or Ethereum, XRP was designed to be neutral, fast, and highly scalable, specifically for international settlements. No other technology currently has the same combination of speed, low cost, and security for cross-border transfers. By integrating ISO 2022, Ripple is effectively preparing to become the backbone of the global payment system. This isn't just speculation. The company has a long history of partnerships with banks, financial institutions, and fintech companies to support this kind of adoption. With XRP at the center of it, the token could become a standard bridge asset for global finance. Now, while retail investors have been using XRP for tipping or smaller transfers for years, the focus is shifting toward institutional adoption. Recent amendments to the XRP ledger have made it possible to embed rich data into transactions and enhance privacy controls, features that were previously missing. This makes the network more appealing for banks and other regulated financial entities who require robust compliance and transparency features. For the first time, XRP is fully ready for serious institutional use, not just retail transfers. Adding to this momentum, CryptoErie recently highlighted some of the decentralization achievements of XRP. The network is now moving toward becoming a fully mature system that can accommodate large-scale institutional finance. Features like multi-purpose tokens, permissioned ledgers, and enhanced privacy options are all part of this transformation. These are exactly the features that banks and governments look for when choosing a digital asset for large-scale implementation. It's no longer just about individual users transferring tokens. It's about building a global infrastructure for financial institutions. Of course, with opportunity comes risk. Large institutions entering the crypto space mean more sophisticated market movements. Operation Choke Point 2.0, as some analysts have suggested, illustrates how regulators and large financial players have historically worked together to shape market dynamics. The goal isn't always to harm retail investors, but to ensure that institutions can operate efficiently and capture market share. This is why understanding who actually holds XRP, whether in escrow, pre-bought, or on exchanges, is so critical. Ownership structure matters because it influences market behavior, liquidity, and how easily new projects or regulations can be implemented. Another key point is that XRP's release schedule and escrow mechanics create a controlled flow of supply. By unlocking 1 billion tokens each month and relocking 70 to 80%, Ripple maintains stability in circulation, combined with pre-allocated or pre-purchased XRP. This ensures that market volatility is reduced even when large institutions enter. In effect, Ripple is trying to balance regulatory compliance, supply management, and long-term adoption all at the same time. Finally, Ripple's recent partnerships, such as those involving RLUSD stablecoins and fintech integration with companies like ZeroAsh and MasterCard, further solidify its role as a bridge asset by combining ISO 2022 adoption, escrow transparency, and partnerships with major payment networks. XRP is positioned to lead in cross-border settlements. However, investors need to be aware that large-scale institutional involvement will bring both opportunities and challenges. Understanding these dynamics is critical to making smart investment decisions as Ripple continues to grow and adapt to a changing regulatory landscape. Let's focus on escrow allocations and what they mean for the market. Ripple currently holds about 35 billion XRP in escrow, with 5 billion directly in their possession. The rest is locked for scheduled releases. Each month, 1 billion XRP is released, and historically 70 to 80% of that amount gets relocked, maintaining market stability. But the big revelation from this year is that some of the escrow XRP is already pre-allocated or pre-purchased, according to Ripple's CTO David Schwartz. And this means that while the tokens remain locked, they already have owners waiting for the release dates. Essentially, Ripple is managing a highly controlled and predictable supply, which is rare in the crypto space. Now, the big question is who owns the pre-allocated XRP? The speculation is intense. Analysts in the community are suggesting that major financial institutions like BlackRock, CK, JP, Morgan, or even central banks could hold portions of these tokens. If that's true, it could have huge implications for both price and adoption. Knowing that large institutions are already invested gives XRP an extra layer of credibility in the eyes of smaller investors. It also hints that Ripple's network could soon be integrated into large-scale financial systems. This is not just theory. Ripple has a track record of partnerships with banks and fintech companies, which supports the idea that XRP could become a global settlement tool. The Clarity Act also plays a critical role here. By capping Ripple's ownership at 20%, it ensures that the network is not centrally controlled. This regulation forces Ripple to either transfer XRP to third parties or disclose ownership of escrow tokens. Both actions are significant. If Ripple transfers XRP to the US government or other institutions, it could position XRP as a globally recognized reserve asset. On the other hand, full disclosure could reveal exactly who already holds the pre-allocated tokens, which could impact market speculation and trading behavior. Either way, this is a major moment in XRP history. Let's talk logistics. If Ripple were to transfer a portion of escrow XRP to a government entity, it wouldn't be as simple as handing over an account. They would need brand new accounts, new keys, and full security measures to ensure safety. The government or institution receiving XRP would have to manage these accounts carefully to maintain integrity and prevent risks. There's no legal precedent for the government forcibly seizing escrowed XRP, and Ripple's legal team has confirmed that such a move is highly unlikely. Any transfer would be voluntary and strategically motivated. While this may sound complex, the underlying goal is clear. Ripple wants to position XRP for long-term institutional adoption. By working within regulatory frameworks like the Clarity Act and by carefully managing escrow releases, Ripple is creating an environment where banks, fintechs, and even governments can confidently integrate XRP into their operations. ISO 2022 adoption is another piece of this puzzle, ensuring that XRP is compatible with global payment messaging standards. This combination of regulatory compliance, escrow management, and ISO readiness makes XRP unique in the crypto world. But there are risks. As institutional involvement grows, markets can become more volatile in different ways. Large players may influence price movements, and retail investors need to understand who actually owns the tokens they're trading. Holding XRP off exchanges and personal wallets remains the safest way to maintain control of your assets. Exchanges, ETFs, and custodial services can complicate ownership, and if something happens to these intermediaries, your access could be affected. Understanding these dynamics is crucial for anyone invested in XRP. One of the most significant developments is Ripple's work with RLUSD, a U.S. regulated stablecoin. RLUSD is already approved on the New York Department of Financial Services Green List and is being issued in the United States with plans to expand into Japan and Europe. This stablecoin is designed to work seamlessly with XRP, providing liquidity and bridging capabilities for cross-border payments. Integrating RLUSD into Ripple's ecosystem helps XRP become the backbone for global settlements, enabling banks and payment companies to move money faster, cheaper, and more securely. Additionally, Ripple has been partnering with fintech firms like Zero, which recently expanded its stablecoin offerings by integrating RLUSD. This integration allows major clients, including payment companies and fintechs, to use XRP and RLUSD together for instant transactions. MasterCard, for example, is reportedly in advanced talks to acquire Zero Hash. This move shows that traditional financial giants are seeing the value in Ripple's ecosystem and are positioning themselves to leverage XRP and its stablecoin partners for future growth. By combining XRP's liquidity with stablecoins like RLUSD, Ripple is building a comprehensive financial infrastructure that can compete with traditional payment networks at scale. Ripple is also actively expanding its corporate structure through acquisitions and new ventures. They recently acquired a company called Hidden Road, which has been rebranded as Ripple Prime. This acquisition strengthens Ripple's institutional services and treasury capabilities, further positioning XRP as a go-to solution for large-scale financial operations. The company is also exploring other acquisitions and partnerships to enhance its global footprint, including companies that specialize in treasury services and payment infrastructure. These strategic moves ensure that Ripple is not just a digital asset issuer, but a full-fledged financial technology platform ready for institutional adoption. Another key factor is Ripple's community of institutional investors. Partnerships with SBI Holdings and other major financial institutions have provided Ripple with a robust network to expand its services. SBI reports show significant growth in RLUSD supply, doubling in just one quarter from 455 million to 900 million. This shows that demand for Ripple's stablecoin and XRP infrastructure is growing rapidly. Institutional investors are now entering the ecosystem in a meaningful way, supporting liquidity and adoption. At the same time, Ripple's escrow and release system continues to provide market stability. By releasing XRP in controlled amounts and relocking a majority, Ripple ensures predictable supply and reduces the risk of market flooding. Combined with pre-allocated tokens, this approach gives both retail and institutional investors confidence in the token's long-term sustainability. When these mechanisms are paired with ISO 2022 compliance and expanding partnerships, Ripple is effectively creating a global, stable, and compliant financial network. Looking at adoption trends, RippleSwell, the company's annual conference, is also coming up in early November. This event often serves as a platform for announcing new partnerships, technological updates, and regulatory achievements. Given the timing with ISO 2022 rollout and ongoing Clarity Act discussions, RippleSwell could be pivotal in showing investors and partners how XRP will integrate into global financial systems. These events often provide insight into Ripple's strategic vision and future roadmap, and they help solidify XRP's credibility in both retail and institutional circles. The combination of escrow management, pre-allocated tokens, Clarity Act compliance, ISO 2022 adoption, and institutional partnerships creates a complex but promising landscape for XRP. For starters, the controlled release of escrow ensures that supply shocks are minimized. Each month, 1 billion XRP is unlocked, but with 70 to 80% typically relocked, the circulating supply remains stable. Add in pre-purchased or pre-allocated tokens, and Ripple is effectively managing both liquidity and institutional expectations, which is crucial for maintaining market confidence. The Clarity Act adds another layer to this. By capping Ripple's holdings at 20%, it ensures decentralization and regulatory compliance. Whether Ripple transfers some XRP to government-controlled accounts or fully discloses escrow ownership, The result is greater transparency and trust. Investors and institutions alike can better understand who owns what, reducing uncertainty in the market. If the United States or IMF becomes involved, even indirectly, it could provide a form of institutional validation that would encourage further adoption by banks and fintechs globally. Institutional partnerships like those with SBI Holdings, Xero, and MasterCard are a critical piece of the puzzle. These collaborations are not just about adoption, they're about creating real-world use cases for XRP. With stablecoins like RLUSD integrated into Ripple's ecosystem, banks and payment companies can move money quickly and efficiently across borders. This gives XRP utility beyond speculation, turning it into a core infrastructure asset. As adoption grows, liquidity improves, transaction speeds increase, and XRP's role in global finance strengthens. Market impact also ties closely to investor behavior. Many retail investors still hold XRP for potential price appreciation, while some are looking at it for yield-generating opportunities through DEFI platforms like Strobe or Flare. Institutional adoption could shift market dynamics as large buyers. Entering the ecosystem can influence price movements and liquidity. However, the controlled release from escrow, pre-allocation strategies, and strategic partnerships all work to mitigate extreme volatility. Investors need to understand these mechanisms to make informed decisions and avoid panic during large-scale movements in the market. Looking at the bigger picture, Ripple is positioning XRP as a bridge asset for the new global financial system. ISO 2022 adoption ensures that banks speak a unified language for payments, while escrow and pre-allocation ensure supply stability. Strategic partnerships and acquisitions expand Ripple's reach and credibility, giving XRP a real chance to be integrated into institutional operations worldwide. Ripple Swell, the upcoming conference, will likely shed more light on future plans and could reveal new partnerships, technological upgrades, or regulatory milestones. These updates will be crucial for investors to understand Ripple's long-term roadmap. In conclusion, XRP is no longer just a digital asset for retail speculation. It is evolving into a comprehensive financial tool designed to bridge traditional finance with blockchain technology. By combining regulatory compliance, controlled supply, institutional adoption, and global payment standard readiness, Ripple is setting XRP up for a potentially transformative role in the financial ecosystem. For investors, understanding these dynamics, keeping track of escrow releases, and monitoring institutional involvement is key to navigating the future of XRP the coming months, especially with ISO 2022. Rollout and Ripple Swell updates will be critical for determining how quickly XRP cements its position as a global settlement asset and what this means for market value and adoption worldwide. Now, the question arises, who exactly are these entities that might have pre-bought XRP from escrow? Could it be major global banks, financial institutions, or even governments preparing for central bank digital currencies? This theory lines up perfectly with Ripple's ongoing partnerships. We already know that Ripple has deep ties with financial powerhouses like SBI Holdings in Japan and several banks in the Middle East. If these partners have pre-purchased XRP, it would mean they are positioning themselves for the new global financial infrastructure where XRP becomes a key bridge asset. Coming back to the Clarity Act, its 20% ownership rule for issuers is not just about legal classification, it's also about decentralization. If Ripple holds too much of its token supply, it could be accused of central control, which contradicts the purpose of blockchain technology. By distributing or transferring a portion of the escrow, Ripple would not only comply with the regulation, but also strengthen XRP's decentralized nature. This is crucial for global adoption, because institutional investors and governments prefer assets that are not controlled by a single company. There's also an interesting theory floating around that Ripple might gift a portion of its escrow to the US government or other institutions, not as a donation, but as part of a strategic alignment. By transferring XRP to government-controlled accounts, Ripple could effectively position XRP as a reserve or bridge asset for national or international financial systems. However, this is where things get tricky. The process would require creating brand new accounts under full government control, complete with new private keys. Simply handing over existing accounts would create security risks, so a technical restructuring would be necessary. From a legal point of view, Ripple's counsel has already clarified that the US government cannot forcibly seize or take over Ripple's escrow. There's no legal precedent for that, and such an act would undermine the principles of private ownership in blockchain networks. However, voluntary cooperation or strategic partnerships could be possible if both parties see mutual benefit. For example, the government could use XRP for cross-border settlements or to support liquidity in future CBDC networks. In that case, Ripple would comply with the Clarity Act and gain legitimacy in the eyes of regulators. At the same time, as the XRP community digests these possibilities, one thing is certain: Ripple is playing a long-term game. It's not about short-term price action, but about global positioning. The passing of the Clarity Act, even in its current House version, signals that the US is starting to take digital commodities seriously. If XRP successfully transitions to being overseen by the CFTC instead of the SEC, it would mark a new era for the asset. It would no longer be seen as a risky or unregistered security, but as a fully recognized global utility token ready for large-scale institutional